Roy Smith is our marketing analyst this week. The USDA is scheduled to release its latest crop report next Friday at 11 a.m. Central. December's report didn't provide much market movement, but some analysts believe January's projections could make a bigger ripple. We talked with Roy Thursday afternoon. As we talk on Thursday afternoon, it's been a bad day for beans. Any diagnosis?
It's a bad day for beans and a bad day for people standing outside, too.
That's true, yes.
Well, I guess what I would say about it is that dead cat bounce has been one of my marketing strategies for the last 20 years. And this year's dead cat bounce pretty much followed a pattern that's close but not quite, because what was different this year is that we actually had two harvest lows, one around the 1st of October and the other around the 1st of November, and in between we had two bounces. Mm-hmm. The first one was, I guess I'd say, a little subdued. It took prices up around 50 or 55 cents a bushel, then fell back, made a new low, and then made another run, which I thought was leading us to $13 a bushel in the cash market here in Cass County. But we missed it by about 8 cents, and since then the market has been pretty much on a downtrend, and as of yesterday and Tuesday, really in the tank, more or less.
Yeah, if you're still holding those cash beans, what price would you maybe try to target to sell at?
Well, there's two ways of looking at that. One of them is to put a stop loss order under the market, and let's just say if it gets back to $12 or less, get out of them no matter what. My experience with that strategy hasn't been very good, because usually that ends up selling at a depressed level and then coming back. But the other thing that I would look for is, just looking back on the original dead cat bounce, look for 50 cents a bushel over the harvest low, and if you get some sold there and you still got a few, set another target at 75. I think that might be a little optimistic. I actually even think the 50-cent rebound might be a little optimistic.
So you think maybe $13 is out of the question?
Well, it's one of those things where we've been talking about the fundamentals justifying $13 beans. We've been talking about that for 4 months. And we actually made a run at it, but didn't quite make it. And I think it's probably one of those situations where what everybody knows ain't worth knowing, and that the $13 prospect is probably not realistic considering the psychology of the market today.
How about on the other side of the road? If you still have some corn left, where would be the maybe opportunity to find some profit?
The corn situation's a whole different situation, and a couple of weeks ago we heard an analyst at the soybean days in Wahoo, and gosh, I don't think I've ever heard anybody so depressed, or so depressing. There's a couple things you can look at. There is a carry in the corn market. The market's saying that we don't want your corn today, but we might need it next summer. And so we've got the bid for next summer higher than the current bid. And it's the first time in 3 or 4 years where we've had a very large carry. We've had to carry before, but pennies. This time we've got 15 to 20 cents carry between March and July or August. And so if you want to be guaranteed some storage return, we want to be guaranteed a more or less break-even price for the corn, you can either cash forward contract it or sell the futures and store the cash. The risk there is that if the cash drops, you're really not locking in much of a profit.
I believe the analyst you're talking about is Darren Newsom, who is a little grinchy, perhaps. What about next Friday, the USDA's report? Any advice on what might happen there?
The January crop report, in some years, we've seen the cash price and the futures price rally going into that report, with farmers thinking that it's going to be bullish, and then it's not bullish and the market drops. I really right now don't know anybody that thinks that report's going to be real bullish, so maybe there will be a bullish surprise in it. That would be my hope, that after 3 or 4 months of extremely low prices in the corn market, that there might be room for a little bit of a rebound from, if nothing else, from an oversold position, because the market's just been so depressed for so long.